Hey guys, welcome to another portfolio update. So today is June 28th, afternoon, Saturday, 1:48, and our portfolio is up to bum, 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 $320,000. So just to give a bit of a 1 year perspective where we're at, since April 1st, 2024, we're up 12%, which is about $34,000. In terms of the last year, we're up about 10%. Keep in mind that this is after going through the first half of 2025 with the Trump put. So overall, we're doing pretty well. I'm going to go through all the accounts individually. So first, I'll start with the TFSA. So remember my TFSA, I use this one for monthly dividends. And currently with what we have here that you see on the screen, pays me about $1,960 worth of dividends. In terms of each holding, I have ETHY, which is a purpose Ethereum, and it tracks the price of Ethereum. I have about 2,839 shares. I'm down quite a bit on this one, but it's okay because Ethereum is currently, is just down in general. Once Ethereum picks back up, we'll be able to climb back to a break even. Also, this one does pay me quite a good amount of dividend, so we don't mind it. Next one is HHIS, and this is a very recent position that I've started adding. So, what I like about HHIS is that it follows about 10 or 15 stocks on the S&P, but they follow specific companies. So for HHIS, they follow Palantir, Tesla, Costco, and a bunch of other ones, Microsoft, all the companies that I really believe in. And I think that's actually an advantage because if you follow the S&P, which is good for about an average 10% return, but the majority of those companies actually do not make consistent gains and compound year after year. Whereas I looked at HHIS and every single company that's on here, I'm very impressed with, and I believe in their growth long term. So I like HHIS because we can kind of weed out the losers and just focus on the winners. So since buying this one, we're up about 9.73%, which totals to a $939 gain. I have about $9,657 invested in this. And I'll probably be adding more as more dividends come in, and I'm going to reinvest that money. Next is HPYT, follows treasury bonds. It's also pretty down right now, so not the time to sell, but once it goes back up, especially if interest rates do lower, this one could be a opportunity to get out. I have about $7,000 to $8,000 of dividend that I've made on this, and right now we're at a $9,000 loss. So once I can make up that $2,000 to $3,000 in between, then we can probably get out of HPYT forever, which would be a good riddance. QQCL, USCL, I'll talk about them together. QQCL follows Nasdaq. USCL follows S&P. They're pretty much more or less the same thing, different names of different market indexes, but they kind of move very similar patterns. So I won't say too much about them, but I'm kind of up on USCL, a little low, a little down on QQCL, but only by $54. And I've had this since last year, about close to a year now, and it's made me dividends every month. So I'm definitely very profitable on QQCL, despite the $54 loss that you see here on the screen. RS follows Canadian real estate. Again, just like HPYT, once it breaks even, I'm going to pull out that one. Anything that's Canadian, anything that tracks the Canadian economy anyway these days is not performing. And the last one is YTSL, which is a Tesla ETF. And those of you who have followed me before knows that I've been in and out of this a couple of times. I like the valuation of it right now. I feel like since Robotaxi, we are getting some proof of concept about the Robotaxi that it's no longer just an imagination, but it's actually slowly becoming real. So with the recent pullback after the robotaxi, I do feel good about getting in right now, um, because this could be paying me dividends while I can slowly wait for this to go up. So this could be potentially a long-term hold for me. All right, so yeah, that's it for this one. Before I move on, just going to show you how well we're doing on the TFSA. So we are up all time 19.72%, close to 20%, and this is since April 3rd, 2024, so about a year and 3 months or so. As you can see, and this is very good proof of concept that if you are interested in just passive income investing like this, where you buy ETFs that pays you a monthly dividend, that it could still be profitable. Obviously, you have to be careful about NAV erosion and the overall like decline of the price of the stock as time progresses. But that's a different topic in a different video. I can go more into that if you're interested. RRSP. So the main things you're going to see is that a few positions have cleared. My Intel position has finally cleared. So if you guys recall, I bought Intel when it was at about 19 in the 19s, high 19s, and I sold covered calls on it. June 27th, which is yesterday, was when that contract expired. So I think if I pull up my portfolio, my my swing journal trade journal, I can show you where we landed on that one, how much money we made on that one. So for this cover call, Intel, we made a premium of $86, and then we had a growth of $25. So we made about $100 holding it for about 3 weeks. The investment was only $2,000. So with a $2,000 investment, roughly just a little bit less than that, making about $110 is pretty good. All right, moving on. So back into here. So Google and Tesla are the last positions that I inherited when I took over the RRSP, and we're pretty close to breaking even on Google. I might still have to decide whether I want to sell cover calls on it or not, because 190 is quite high. And then basically making some cover calls on that would maybe potentially be a good idea, because Google just has been underperforming this last year. So maybe if I held it for like 6 months, that it could make some new all-time highs in the future, just because it has been underperforming. But it is such a premium stock. So I havenher made up my mind what I want to do with Google, whether I just want to take it out when it breaks even at 190, or whether I want to sell cover calls. But we'll see as the market progresses in the coming weeks. The next one is Tesla. And again, this Tesla was bought at 378, which is quite high. Since Robotaxi about a week ago, where it kind of went up to the all highs of 256, 356, 360, and it's kind of dropped back to 322. That's why you saw me buying YTSL in the previous TFSA account. So this one, I have a cover call on it as well, and expires next week. And this was a really good one because look at how much gains or return I made on that one, right? I made 600 and something dollars selling this cover call, and right now this contract is worth 50 cents or $50 basically. So we made 650 and it went to zero, and then we get to keep the Tesla stocks after that. So just a win while you're waiting for Tesla to go back up. So that's that. So overall, our RSP, since acquiring it in February, and right after we acquired it, we had the Trump put. I think we're doing pretty well because we have a 5.3 all-time gain on this. Yeah, it's like I said, it's not a whole year. If I started this a year ago and I only made 5%, right, that would look pretty bad, because 2024, there was like an 18% gain that the S&P made, right? So to perform at 5%, that wouldn't be very good. But because this started in February, right? If we look back here, it started really realistically February 23rd, 24th, 26th, around there, right? And as soon as that happened, we had the Trump put and everything else that happened, right? So as you can see in the 3-month picture, we've went from the lows of $79,000 of this portfolio value up to where it is today at 107. So I think it's pretty good given the macroeconomic situation that this portfolio has been put under. I will say that if you look at my cash holdings, it's quite big in this account. I have about $20,000 on the sidelines. As we go into July, and we have the 4th of July, and we also have July 9th, which is supposed to be the day when Trump has to decide whether he wants to continue the tariffs or get rid of some. There might be some volatility in the first week of July or so. So if there's any kind of opportunities, I'll be buying bigger since I have more cash on the side. I usually don't hold as much cash on the side, so that in case there's a buying opportunity, but because my cash is a bit over, if I do see a buying opportunity, it'll be a bigger position than usual. All right. Next one is going to be the non-register account, and this one I use for just Canadian stocks. This one is down because I took money out of the non-register and I put it into the other one, and then when I put it back in, I was basically at a loss because you might not see it there, but it was between the non-registered and the margin account. The non-register is down -8%, but the margin is up 40% because I transferred them all over from non-register to margin when the non-register was at a loss. Okay, so you basically, to look at this maybe more accurately, you got to kind of subtract the 8%, and then overall these two used to be one account. We were up whatever percent that would be. Okay, so that's why you see the down, but again, it's only because I was moving the stocks at a loss. But just give it some time, and this loss will eventually eviscerate itself. So in my non-register account now, I only use it to hold Canadian stocks. I have another Ethereum position over here, which I'm down on, but that's fine. Again, just like what I said about ETHY earlier, same thesis. I have LQWD, and I probably will do another video soon talking about LQWD, but this is a trade that I actually made quite a bit of money on for a swing this week. Just quickly show you the swing trade journal. If you guys look here, LQWD, I bought it on June 24th at 548. And then in 2 days, I sold at 605, making a $123 profit. So in terms of the chart, looking at this 1 week, basically we were buying here, around there maybe, and when I was at like maybe mid 550, maybe a bit lower than that, and then we capitalized on the gain going up to about 6. Now eventually went to 7, but still we still made a nice healthy 10% gain on that, which is why we profit 128, $3 in 2 days. So on Friday, you see this, it sold off quite a bit, and I'm just kind of back in again. Again, with a very small position, only $234 this time, with an average of 585. And if it drops more, I'll just be doubling down, maybe add another $400, $500 to the position, so that I can get my average nice and low. But yeah, I'll do another video to talk about what this company is. Trust me, it's not garbage. I think it has great investing potential. So in that video, I'll explain what the company is and where the opportunity lies. In this portfolio, I also have another big Tesla position. This is my personal Tesla position. I use Canadian dollars to buy it because my US dollar is limited. So I have about a $28,000, $29,000 Canadian position in Tesla. Because Tesla sold off this week by quite a bit, we are only up 1.7%. At the peak of this week when it was about here, we were up maybe like 15%, something like that. But that's fine. Tesla is going to have its volatility, do what it does. But I do believe if robotaxi continues to develop, that we do see stock prices for Tesla going up. VFV is a Canadian ETF to buy the S&P 500. This is just, a small position of $3,000, and I'm about 4.66% on that, $140 gain. Not planning to take that out anytime soon. Just going to keep holding it for 3, 4, 5 years. Visa, this one is a new position, and I've traded Visa before. Again, just going back to the swing trade journal. Yeah, I used to have Visa, and if you guys recall on Visa, I bought it in November, sold it in February. Oh, yeah, in February, and I made a $650 one gain. Again, I did that another swing trade on Visa in March. Now I'm just back in Visa. Visa was always supposed to be like a long term position, but when I saw some volatility in the future for Visa, I kind of took it out. And now that Visa has kind of dipped since those prices, so it was trading at like 360s, 370s at its high. So once it pulled back about 330, I'm back in Visa again. So that's my position in this one. Because I do believe in Visa long term. It's just one of those compounding machines. So I do see this going back up to 370, 380, and then we'll be making some gains, some good gains when it does that. Next one is XSU. Again, this is one of my biggest losing positions that I have now. Now that I've gotten rid of AMD. Oh yeah, I didn't get to talk about AMD. That was another big one. I'm just gonna quickly talk about that one. So this week, what was also very important was that I did get out of an AMD position. I had two. My first AMD, I got in at 108, and you guys saw my videos on that, right? I sold cover calls on it, and we made a profit, and we got out. Everything was great. But I had a second AMD position, and it was quite high. So the story behind this one was I got in at AMD at 120. It went to 130, and then I decided to switch out of AMD to AMDL, which both follows AMD, but AMDL is the 2X version of it, a leveraged version. And as soon as I got into AMDL, the market dropped with the Trump put, and I was down maybe at the lowest, like 40%, 50% at one point. But now it's gone back up. So, you see here, I bought it starting back on December 7th. And I held it half a year, and I managed to get out of a small gain, 0.2%. But the fact that we didn't take a loss on that was a big win, just because that second AMD position the average cost was just so high. So this is something that many of you could be doing as well. Many of you could also be in positions right now where you're holding a bag, right? Like the stock price is much lower than the price that you bought at, and you're wondering what to do. A lot of you are, panicking and thinking of, just selling and take the small loss, because if I don't now, maybe the loss will be bigger, right? And that's fear sinking in. For, all of us, even no matter who it is, we're all going to have some stocks where it doesn't go our way. Exactly, because that's life, right? What kind of life will you be living if everything just goes 100% the way you expected? XSU was one of them. It's basically following small caps, the Russell 2000, and it just has been underperforming, even though I bought this at a pretty okay price. So we just got to wait this out. And what I'm seeing on the charts is that small caps is potentially going through a breakthrough right now. It is kind of going to some new territory, kind of moving away from that bearish sentiment that we've seen in the Russell 2000 in the last 3 months to half a year or so. So I am optimistic about XSU. As long as I don't sell it, the loss is not real. And the loss we're talking about here is only about $500. So, which is a 7 to 8% loss. So yeah, we can definitely get out of that one. Lastly, this is my non-registered margin account. This is an account where I put all my US stocks and US dollars, because now with how Wealthsimple is set up, in your non-registered margin account, you could also sell cover calls. And that's exactly what I want to do. And that's why I moved my US holdings here, and I kept my Canadian ones in the previous one. So looking through here, I have Amazon. It's now in the green, very similar to AMD. It was in the red for a long time. And we recently pulled green, and I'm not planning to sell this, even though we've broken even and I'm up 5%, because now with talk of Amazon creating their own stablecoin, I do feel very bullish on Amazon. But Amazon is one of these stocks you have to be patient on. It's not one of those stocks where you buy it, the next day you wake up and it's up 20%, before market opens, right? It's going to just, take its time, go for a walk, and then when you least expect it, it's going to soar. So I'm just going to hold Amazon a little longer. I did take some sell some Amazon Friday, just to take the reduce the risk a bit. So I sold $1,500 because I did know on Friday that if PCE data was going to be good, it will go up. I said right here, scenario one, PEC news is good, market will surge, but then it's going to pull back and fill some gaps further down. And then scenario two, PC data was bad, it just goes straight down. And we saw that happen. Scenario one happened on Friday, right? PC data was as expected. Markets weren't affected negatively, and then it kind of went up a little bit in the pre-markets and first, half hour trading, and then it just went down like a brick at one point. So I sold some Amazon before that drop happened on Friday. So I did take some profits on that part, but I haven't updated on the journal log because I do have more Amazon and I'm going to hold out much longer. GGLL is Google. So I do have a Google position. Again, I also took a lot of Google off on Friday. So you see I sold $2,600 worth of Google because Amazon and Google, they're kind of similar. They both make 7 stocks that I like, but I like Amazon more than Google. So because I'm holding both, I'd rather have a smaller Google position and have a bigger Amazon position. And again, just at the end of the market yesterday, big news came out. OpenAI was going to partner up with Google, and we saw this huge spike. You see that spike on Friday? Yeah, that was a big one. So I'm just going to, hold the opportunity for next week to see how high this is going to go, right? Basically want to ride the wave when the trend is moving up. And we're now seeing a potential uptrend after so many months of bearish territory for Google. HIMS is a new swing position I'm in. So I bought at 45. And on Friday, I did think about selling at about 52 roughly after just holding it for a day or two. I think I was up like $120. Great work for just holding the stock for a day or two. But I think HIMS can go much higher, and I'm waiting for it to go back in the high 50s. So maybe when it's the high 50s, that's when I'm going to sell. So I decided to forego my $120 profit and to potentially earn $200 to $300 worth of profit once it gets to high 50s, maybe even low 60s. Oklo, also a new position I bought yesterday. I do like Oklo. I may talk about Oklo a little more in that next video I'm talking about. But I was looking to get an Oklo if it was below $55.50, and I managed to get a pretty good deal at $54.98 on Friday when it was kind of like, at its lows over there. And I think next week, if Oklo continues to, dip like that, where there's buying opportunities, and I can also have the opportunity to lower my current average. So something below $54.98, I'll probably do that as well. So this is a starting position on Oklo. OPTT, I've talked about it quite a bit in previous videos, so I'm not going to focus on that. PayPal, same thing. Last thing I want to talk about before ending this video is SoFi. SoFi has been up big. So look at my position. This is one of the biggest positions I have in this account. My average is $13.88, and SoFi is now at $17.22. And actually, it was at $17.50 on the highs of Friday. I do have 3 contracts of covered calls. Those are probably going to get exercised because they were 15 calls. I kind of wanted to lock in those profits when SoFi and the market was in an uncertain period in the last 2-3 weeks. But aside from those 300 shares, I do have another 310 shares, and I am up 24%. So I'm planning to hold the remaining shares for longer, so that because I think SoFi could, it's nice that it's at 17 right now, and it could go to 18 in the short term. It might pull back after that, right? But I think those 3 cover calls is kind of like my way to reduce risk. If that happens, I'm okay with holding about 310 shares. Even if SoFi goes down in the short term back to, I don't know, $14, $13, knowing that I think SoFi in the next 6 to 12 months will be a $20 to $22 stock. Okay, so that's why I still have 310 shares that I'm not going to touch or sell no matter what happens. All right, and that's it. And before ending this video, I just want to verify everything. So I have Blossom. Those of you who do use Blossom knows that that's a verification in my portfolio. If we click on my Blossom is down. We click on my Blossom account. You can also see that since joining Blossom on September 2024, I'm up all-time 12%. So yeah, that's not even a full year. That's about 9 months, and we're up 12%. So that's good. And that's the verification that everything we looked at on my cell phone was real, not fake. All right, so hope you enjoyed this portfolio update, and I'll see you in the next one. Bye-bye.